Welcome back to Fast Market, everyone. Kevin Hinks back here for the second half of our show, along with Fast Market alumni Alex Coffey. We got the band back together for a couple days here, and now we'd like to bring in the co-founder of LikeFolio.com, Mr. Landon Swan, to the show. He's going to further our presentation on credit cards by talking about American Express. Landon, when we talk about Visa, MasterCard, American Express, one of these stocks is not the same as the other, and that's American Express, isn't it?
Right. Yeah, it's all about the transaction. They don't get too far from that. I think that's what's great about that is this is a wonderful time to be in the middle of transactions. I mean, we've got more people spending more money. The money's worth less than it was before, so they have to spend more. But beyond that, consumer spending is up tremendously. You've got possible interest rates going up. I mean, this is the time to be a credit card company. And if you look at just how American Express has done over the last, year or so, in fact, 5 years, it's just off of 5-year highs. I think 7 or 8% off of 5-year highs. And you can kind of see what happened here over the pandemic with this chart. If you look here, so the green line is the 90-day moving average of purchase intent. That's someone saying that they're signing up for a new credit card. Not that they're using, but they're signing up for a new credit card with American Express. And you can see, with the other line is the stock price. So you kind of get an idea of when the pandemic was. And you could see it took people about, maybe 6 months or so, 5 months to start really spending more after the pandemic opened up, after everything closed. I mean, so the people opened up these new cards at record levels over the following year. It went tremendous, it fell off tremendously, and now it's starting to pick back up again. So you can actually see how the pandemic affected credit card behavior right there in that chart. It's pretty cool. But now we're getting back to the normal levels. And again, the stock is just off of all-time highs, doing extremely well. And I think a lot of that has to do with, like I said, inflation. I think the new number I just saw was 7.9%. Again, I'll take the over. I think it's way higher than that on what people are actually seeing. You've got household credit card debt has had the largest increase in 22 years over the last quarter. So people are spending more. They're racking it up on their credit card. And they're sometimes not able to pay it all on time, so they're charging these higher fees. And this is obviously very good for a company that makes money off of that. Credit card spending overall, this is not LikeFolio data, but just overall credit card spending is up 28% year over year. Obviously, the last couple of years have been outlier years, so that's not, it's not exactly a perfect metric to look at, but still, that's a big number, 28% year over year. And then if you just kind of look at the consumer behaviors, people talking about how they're using their credit cards, we've got people talking about paying off their credit cards down 34% year over year. So the number of people that said, I just paid off my credit card, that's down 34% year over year. And the people who are talking about getting a new credit card is up 14% year over year. So this goes right along with the data that we're seeing out of all the institutions. And that is people are spending more, they're racking up more debt, they're using their credit cards more than they ever have. And, one thing that we were always watching with these companies was, how will the buy now, pay later affect it? That whole trend, because you got companies like Affirm and Klarna coming in, and the theory was maybe they'd take some of the credit card volume away. And for a while, we did see that. We saw that they came in, people started using the buy now, pay later option instead of their credit card. But now when you look at those companies, we're actually seeing a pretty substantial decrease on recent basis. So Affirm, Klarna are not making the big dent that maybe people were afraid of when it comes to investing in Visa or American Express and all the others. So, in my opinion, American Express is poised to do very well. This is a great environment for them, and all the data points seem to be coming in and pointing towards them doing well in the near future.
Landon, I think this is also interesting, too, when you start thinking about, who has what type of cards and where are their exposures, because you obviously highlighted some points and some data that, maybe indicates that there's going to be some stressors on this economy as we go forward. But because it's driven a lot by inflation, it's going to have, unfortunately, a greater impact on those who are on the lower side of the wage scale. from my understanding of a company like American Express compared to its peers like MasterCard or Visa, it's going to have an outsized exposure maybe to the higher end of the wage scale, and particularly to corporations, particularly big corporations, which typically are able to actually, make their bills, or historically that's been the case. So when you start thinking about potential default risk down the line, I would imagine that although American Express, being that it holds a lot of that debt on its own sheets, has a greater overall risk, it may have a lower default risk, and given it also is a charge card and typically has higher payments, so maybe its users are a little bit more accustomed to making those bigger payments.
Yeah, I think you're right. I think that it does tend to skew towards the higher income earners as clients, and so I think that's interesting that the buy now, pay later, what I was just talking about, that's going to skew towards the lower income users, and they're actually off a little bit. So I think people are kind of moving over towards or back towards credit cards. They tried it out for a little while. The buy now, pay later, it's starting to fall off just a little bit. I'm not saying it's dead, but it's not the huge threat that everyone thought it would be. Whereas American Express, like you said, yeah, everyone's going to be buying more. Everyone's going to be spending more. Consumer spending's up, and that's going to be pretty much across the board. But I think that, just like you said, their risk of default on those accounts is probably much lower because they have the higher income people as clients, and so it's just they've got more in the bank. They've got maybe better spending habits, or at least as a percentage of their overall worth or net income. So I agree. I think they're probably, of all of them, American Express is most likely in the best position. So if you like this space, this is the one I would pick moving forward.
Yeah, I think this advantage that American Express has over, let's say, Visa and MasterCard is that they're also the bank, right? And by the way, a note to our viewers: if you get a note saying you have an outstanding balance, it's not a compliment that you have an outstanding balance. It's not synonymous with really good. It means you have an outstanding balance. So when you see this company actually makes money off the interest and not only the transactions. Landon, the data says that travel and entertainment on American Express back to about 82% of pre-pandemic, total receipts back higher than pre-pandemic. Are we dealing with a whole bunch of pent-up demand here that's about to burst or waiting to burst, now paused again by the war in Ukraine?
I think it's ready to burst. I mean, you've got people that haven't gone on vacations. They haven't maybe gone out as much as they're used to over the, generally speaking, they paused it for the last year and a half, 2 years. So you're starting to wind down on COVID, and the weather's getting nicer. It's almost springtime, right? Things are start opening up as far as travel goes, and it's just nicer to go outside. I think this is the perfect storm. At least in the United States, about getting out there and using all that pent-up demand. And hey, just like we showed you, people got new credit cards. They signed up for all these new credit cards, and they're obviously comfortable maxing them out or carrying a balance. So I do think this is a bit of a perfect storm when it comes to consumer spending. And again, American Express is right where they need to be.
Landon, I think that's a really good point. We already know people are bored. Tom Brady couldn't handle retirement for 8 weeks? So we know that there's definitely pent-up demand to do stuff other than sit at our homes. But American Express, as I said, also has a tie to corporations, and corporate travel really has not come back. We started to see, little bits and pieces. But as an entrepreneur, I know you spend a lot of your year typically traveling around, meeting people, going to marketing events, etc. Do you feel, from your expertise and kind of the vision you have within that space, that it's a situation where it's kind of slowly, then all at once?
Yeah, I think that. So, back to Kevin's point about the higher income users on American Express, I think this is the one flip side to all that, right? This is the downside, where generally speaking, the average consumer is far faster to get back out there than the average company. And so since so many companies use American Express, and that is a large percentage of their volume, especially compared to a Visa, MasterCard, or Discover, then yeah, this is a situation where this is the only weakness that they have. But eventually, I think that you got to remember that people run companies. And these same people that can't wait to go back out to eat at restaurants, can't wait to do all this, go on vacation, they're going to be more comfortable going on trips, and they're the people that make the decisions. And eventually these companies are going to start going. And I do think it's going to be floodgates, because you're in each sector, in each industry, you're just going to need that one person, that one company, I mean, that kind of leads the way. They put on the big conference, then all the competitors say, oh, we got to put on ours too. So I think it's going to happen very quickly when it does happen. So I'm not too worried about it. I think it's around the corner, but that is a weakness as far as American Express goes, because they depend so heavily on that and more than the others. But I do think it'll get there. And just like you said, I think it's going to be floodgates when it happens.
Landon, it's amazing to think about that this company may actually come out of the pandemic stronger than it entered the pandemic. But we always appreciate and love the data that you bring to this show, Landon. Thank you so much for coming on as always. Great job. That is Landon Swan, the co-founder of LikeFolio.com.